Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 27, 2026, and we're diving into Union Pacific's latest earnings report for the fourth quarter and full year of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Union Pacific's performance, especially given their record-breaking year in terms of safety, service, and operating results.
Revenue and profitability overview. Let's start with the top line. Union Pacific reported a fourth quarter operating revenue of $6.1 billion, which is a slight decline of 1% compared to last year. However, the net income for the quarter was $1.8 billion. John, can you elaborate on these figures?
Absolutely. The slight dip in revenue was primarily due to lower volume, although this was partially offset by core pricing gains and fuel surcharge revenue. Despite the revenue decline, Union Pacific's net income was bolstered by industrial park land sales, which contributed $234 million. This helped them achieve an adjusted EPS of $2.86 for the quarter.
And how did the full year look for Union Pacific?
For the full year, Union Pacific's operating revenue was $24.5 billion, up 1% from the previous year. Their net income grew by 6% to $7.1 billion, and the adjusted EPS for the year was $11.66, reflecting a 5% improvement.
Operational efficiencies and future outlook. Union Pacific has also reported improvements in operational metrics. Can you tell us more about their operating ratio and other efficiencies?
Sure. The fourth quarter operating ratio was 60.5%, slightly worse than last year, but the adjusted OR was 60.0%. For the full year, they achieved an OR of 59.8%, which is an improvement. Notably, their freight car velocity increased by 9% to 239 daily miles per car, and they also saw improvements in terminal dwell time and workforce productivity.
Looking ahead, what can investors expect from Union Pacific in 2026?
Union Pacific is projecting mid-single-digit EPS growth for 2026, with a focus on meeting customer demand and improving their operating ratio further. They also plan to continue strong cash generation and consistent annual dividend increases.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting an EPS of $2.90, but Union Pacific reported an adjusted EPS of $2.86. What does this mean for the company?
This slight miss of 4 cents against the forecasted EPS of $2.90, based on a survey of 8 analysts, indicates that while Union Pacific performed well, they didn't quite meet the market's expectations. However, the overall financial health and strategic initiatives of the company remain strong, which should reassure investors.
CEO's perspective and strategic initiatives. Union Pacific CEO Jim Vena mentioned some strategic initiatives. Can you share his perspective on the company's performance and future plans?
Jim Vena highlighted that 2025 was a record-breaking year for Union Pacific, with net income growing by 6% and EPS increasing by 8%. He emphasized their focus on creating America's first transcontinental railroad and improving safety, service, and operations to support growth. These initiatives are expected to drive further improvements in their financial performance.